High frequency trading has spiraled out of control and a crash is inevitable. You came here for the truth, so let me unveil that for you. Today we will discuss the high frequency trading, the flash crashes which have occurred throughout recent history. I'll show you the examples of those, and we can connect this into why this is so important today. Let's begin with the most recent event, and that is China's stock market declining 12.6%. And within seconds, it comes back up. This is not natural. This is not an organic event in the stock market. You can see that if, for example, a billionaire investor like Warren Buffett decides to sell a large portion of stock or buy a large portion of stock, that stock does not go in such a straight line, even though billions of dollars may move. It happens much more gradually. When you see a straight line forming, either up or down, you know that this is high frequency trading. What is high frequency trading? You're talking about computer algorithms which own and control the stock markets. Most of the trades that take place today are not done by human beings. They are done by computer algorithms, computer programs. So let's look at this. The article out of Bloomberg, apparently they've pinpointed this. We don't know if it's true or not, but we've seen it take place many times. An investor who used Chinese stock index futures for hedging triggered a flash crash, and that was on Tuesday. And what we're looking at, look at this. The contracts on the CSI 300 due in June dropped by the 10% daily limit before recovering almost all of their losses in the same minute. Think about that. If this was a natural event, could it happen all within that same minute? Absolutely not. You would not have this kind of event taking place. If there were human traders are fast. That's their job. But they do not react in milliseconds. It is impossible. And this allows the protections that are put in place to actually have an effect. But when you're talking high frequency trading, none of this means anything. This is just the most recent example. Whether or not this was the actual case, whether or not this was a test, whether or not this has been done by central banks, we don't know any of that. What we do know is that high frequency trading has caused such instability within the system, and it is at a time when we need more stability. So let's look at this here. As you see this, what we have here is the Dow Jones, another example of that. You can read the articles out of CNN, and basically what we've seen historically is that this has happened within the US multiple times just in the past few years. So let's look at financial crisis. Up until now, we've seen this occur many times. This is another case. Of course, we had the time 2010 where we have this major stock market flash crash. They have apparently found the individual responsible. They're charging this individual. And let's take a look at that here. The first arrested in 2015, the U.S. Justice Department charged this individual of West London with wire fraud, commodities fraud, and manipulation on one count of, quote, spoofing when a trader places a bid or offer with the intent of canceling it before the execution. It goes on to explain the whole situation, but essentially this has been going on for a while. In fact, if you work for Goldman Sachs, JP Morgan, or any other big banks, and you do this on a daily basis, it's totally legal. If you were to do this and you worked for the government, one of their agencies, perhaps part of the central bank, and you use the high frequency trading programs, it's totally fine, totally legal. But because you're an individual investor trying to use their schemes to profit, you get put in jail. And that's what this is. It's a mafia in such a way. It is a cabal. They want to own everything. You don't have a piece of that. You can't do that. If you want to do what people like Warren Buffett do, you have to end up going to jail. If you go against their word, you go to jail, you get fined, you get shut down, you get silenced. That's the way this works. That's the way this system works. You do not have the same opportunities as those on the inside. High frequency trading is designed specifically to keep you out of the game. Look at this. This is the Swiss stock market where the same thing happened. Now, it may drop by, 1% or 2 or 3, but when you're talking such big money, you have to realize everything is interconnected with that. You're talking about pension funds, retirement accounts that people rely on, and one event could trigger another event and another event. That's the way these all work. That is the fear involved. Let's look at this as we see it's not only the big banks involved in high frequency trading, or at least trying to get their hands on it. University student Spencer Singleton is among the growing band of amateurs turning to computer-driven automated stock trading until now, the preserve of hedge funds and mega brokers. And he says he's beating the market. Now, does it matter if he actually is or not? No. The point is that we're going away from human trading and we are going into the computer algorithms. It's a very, very dangerous system. This should not be allowed. It is extremely dangerous, not because of this individual, for example, engaging in his own programs. He writes the program, it trades on the stock market. That's one thing. But the fact that the stock markets have all of these triggers set in place, and your pension fund could be the end result. That is what worries me. So what do we do? How do we prepare? How do we plan? Everyone's always looking for solutions. Well, I'll tell you what, if you're relying on your pension fund at the end of the day, when you decide to retire, if you're able to do that, and you have, decided, okay, well, my pension fund is going to be how I pay for my expenses at the end of all of this, then you're in big trouble, unfortunately. There will be no money left, whether that's because it's squandered, whether that's because of the so-called entitlement reforms. We don't know. All I know is that if you're relying on that, fortunately, there may be some issues. So don't. You need to get prepared, and that means investing in real assets. That means getting out of debt, getting out of the system of debt. And I talk about that in my eCourse, in all of the other videos. So please stay tuned for more on that. If you found this video informative, please give me a thumbs up. Check out my website, themoneygps.com, for further information. I got the free e-course there. I got free ebooks. I got tons of information. Check it out, themoneygps.com.